Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It's good to be back. I've been gone for a few sessions. I was actually in Florida. We did a Boca conference, and it was great to see a lot of people from Redler All Access, from the VTF, from all over the, basically the area that still want to learn technical analysis and learn how to navigate these markets. So I do apologize that I wasn't here. Hopefully you were there, and that made up for it. As far as where we are now, we're in a definite interesting spot because we've had a huge rally off those, February 11th, 12th lows. We've come into some resistance and we're a bit overbought. But markets are still hanging around. So now the whole, I think, negotiation or debate, so to speak, is where could we go next before going lower? Everyone says, where are we going to go before going lower? So no one truly believes in this move still. And chances are we might not, have had the low of the year in, but it's still, February. There's a lot of time. Whereas if you just have a strong opinion and you're just shorting the market, you might not be able to stay with your positions until the market tells you it's ready to try and make new lows based on, some of the structural damage we've seen overseas and some of the, economic headlines, et cetera, et cetera. So anyway, we're going to continue to every day look at the landscape and try and take high probability moves and try and figure out, what's next. And if, you look at the futures right now, the futures are, down 5 or 6 handles with fair value, some small red arrows overseas, still not much potency, so there's still, commitment to this move that we've seen. So let's take a look at the S&P. So you go to the SPX, which is S&P cash, and, just remember, I was trying to always show you, like last year, how you had your low, you had your red drug reversal higher low, took back the 8 and 21-day moving average around 1940 before a big move that took out resistance right here and held above it. I kind of went over this at the seminar on Saturday. So not saying this is the exact type of scenario here, but you definitely have some similarities. You have the 1812 low right there. You had the retest on that Thursday. Remember with that little article? You had some power thereafter. And then you had a little bit more appetite, so it just didn't come down. And then it went all the way almost to prior resistance before, giving you a little bit of a shake-up last Thursday, Friday, and then your gap up yesterday. So it seems like it's trying to break above, this consolidation here, but it has come a long way. And the oscillator is about plus 66. So maybe a bit of digestion is nice. But look what we've done. We've taken back the 8 and 21-day. Right around this 1910-ish area, and now it's starting to curl up. If you again one more time look at what happened here, we took back the 8 and 21-day here, had a quick move, got overbought, came back to it, and then rode the 8-day from about 1990 all the way up to 2120-ish, which was another 100 handles. So. Not saying this is going to happen here, but if you're short, and I know guys who started shorting here and they're still short, you got to be a little careful. I know for me, when I left for Florida, I shorted the close here, added, and I talked about on Twitter how I was covering 190.75s or around 191, and then flipped long. So today I come in flat. So with the futures down, I'm going to see, what happens today. So what I would do is I would write down yesterday's low, which is 1924. If we could stay above 1924. Actually, this is the prior high, and here's this gap. If we could stay above this spot and digest, which would be better to just do nothing the next day or two, the next time we get above this, perhaps there's more power. And most people that I read, that I talk to, are thinking we could, probably see some kind of overthrow move to 1990 and maybe even up to, this spot, before this is all done. Lots of earnings are almost over, oil's above 30, and away from there, buybacks are going to start. So if you have a quiet little period where buybacks happen and there's no major headlines, you might see something like this. But a few days to the side, sideways would be good. So with that said, let's see how we handle yesterday's gap in the spiders as well. So, we are off the overnight lows in the spiders. We were down almost 0.5%. Here is where the gap starts. Okay, the gap starts for the spiders at 193.79. Kind of similar to what happened here, where you had this last gap up, it filled a portion of it, let the moving averages catch up, showed constructive nature. That's when all the high beta tech went positive on Friday. Tweeted about that too. I was watching it from Florida with my son playing basketball. I'm like, this is a time to cover. Maybe go long some high beta tech because it showed relative strength, and then boom, gap up. So anyway, this is kind of gapped up above prior resistance. I would say, be very, I don't even know if it'd be constructive. It would be impressive if, the spiders hold above Friday's low and continue to hold that. I think it would be a little bit better even if it were to trade below, do kind of what it did Friday, make a little bit of a tail and create another flag so we work off some of the overbought condition, and then perhaps at some point this week, get above this and continue to work our way, towards a bit more elevated levels. So some of the talk out there is like, okay, what's leading what? Has money rotated? If you do look at the XLE, which has been broken for a year or two, that had a nice little feisty move off the lows, one of the first few sectors to take back the 50-day. So what does that mean? It means short term, it's showing relative strength, right? Look, it's above the 8 and 21-day, above the 50-day now. So maybe that's telling you that there's some more gains here. It's already poking its head at the prior. Remember this big support level that broke right here? Well, it's right there. So I don't know if it gets through it at the first attempt, but it is above the 50-day. If you want to write down where yesterday's gap starts, it had a lot of power yesterday. That is at 57.64. So as long as it stays above 57.64, you can even give it to, here, this stair step. Remember the low, then you had a higher low, and now it's bumping up against here. So a little sideways action, and I don't think a move to 62-ish could be ruled out. Still below the 200-day. Obviously, it's been broken for a heck of a long time. It's been below the 200-day since almost 90. That's why I say when you get below the 200-day and stay below, it's not even investment, let alone from when it broke its momentum area here below the 8 and 21 days. So anyway, this is where we're at now. So, trash for treasures. Well, if this has been in your trash bin, it's been someone else's treasure down here, and maybe there's a little bit more room before it starts to head into some, major resistance, which comes a little bit closer to up here. So there's a void here. And that's another thing we went over in the presentation, the seminar, of voids. Voids tend to, not have much price memory, so they get somewhat filled. So we'll see what happens if XLEs continue to do that. And you'll see the difference between sectors. So the XLE is above the 50-day. You go to the Russell. Russell is far below it. The Russell did have a very feisty move off the lows, but look where its 50-day is. Its 50-day is all the way up here. So a lot of sectors are much below the 50-day. So at this point, it does seem as if it's involved in playing some catch-up. It just finally took back the 8 and 21-day. You did have a gap yesterday. So see if it holds a portion of it, I guess. So your pivot here for the IWMs is 101.24. It's already below it. I think I think you could be a buyer on dips in this for as long as this rally stays intact. This spot. Sorry, here's the 21-day right here. The high, what's this high? 156, okay? So this would be good. I would say if you could buy this around 156, chances are this probably works its way back to this area also. And, as far as another point of reference I've been watching now is the February, either the January 29th or the February 1st high. So maybe you want to see what sectors are already above the February 1st high, and that's showing you relative strength. Because right now the spiders are toying with it. The Russell isn't even near the February 1st highs. And just to show you, the IBV is also a little relative weakness too. Like it's just, not at that yet. Where's the February 1st high here? The February 1st high here is all the way around here. So this isn't there either. And this is where it broke down from with the last, little pivot. So maybe because yesterday was an oil move and money rotates, maybe money will come here today, see if it goes green, if it can get above 266 and clears 267, maybe it continues. And there's I would say before it's all said and done here, maybe the buyers want to get to this 285. But look where the 50-day is too. 50-day is all the way up here. So this still is not showing you any relative strength. It's just a trading vehicle, so to speak, until the major repair is done. Here is that ascending channel that broke, another ascending channel that broke, the 2016 ascending channel that broke, and where it hasn't really done much since. So you'll hear on TV about these rip-roaring rallies, and P.S. things are still very, very broken, and it's just an oversold bounce mode, and maybe something comes in here, but this hasn't even taken back the 21-day yet. So maybe it comes in late, maybe it doesn't, but if the market starts to roll down, these weaker sectors should probably roll down, quicker. So maybe that gives you a signal. That's what happened right here. Remember this little small wedge? Couldn't get near it, and then on that next turn lower, it was very weak. So just know that the bios have been acting weaker, and so is the Russell compared to oil, and the spiders have been in line, and the Qs have been somewhat in line. Let's just lastly go with the Qs just to see, how it's above the AIM 21-day here. This is major resistance coming into the 200-day. It's also not above the 50-day, which is right here. So I would say short-term tactical. It holds yesterday's lows and comes, maybe goes below it, comes back above it, continues to be constructive from this area, and then this 105.39 is could be in the cards. So the easy snapback, oversold slingshot, that trade's gone. Goodbye. Now it's, can you penetrate the February 1st resistance points, and if so, is it a fake out, or can it hold it and give you an overthrow move into higher areas over the next few weeks? And that's the next few questions that I ask myself every day. So then you go to high beta tech, which has been taking turns. Yeah, on Friday, a lot of those high beta techs, with the market down, went green first. So some guys probably were long into yesterday. I went with Facebook because I didn't want to complicate things. I went Facebook and spiders because I was away, but it was good to participate. So first thing, I looked at, it was Amazon. It was probably one of the strongest. Amazon still broken, still, since the breakout failure, it's come in a heck of a lot, but gave you a little bit of a tradable move. Nice little RDR on Friday right here around this pivot, around that 523 pivot, and then you had some power yesterday. So I don't know if you chase it now, but again, if we're talking about where could some things go, here is the 50-day, and here is some major resistance. So if this rally wants to keep or stay on the move in the next coming weeks, this is a doable spot. But you got to trade it every day, however you do according to your process until then. Right now, you have yesterday's gap to trade against, which is 541 or maybe 50% of it. So as long as 541 holds and this gap holds, there could be a move to this spot before it's all said and done. Google, some people were scratching their heads yesterday why it was so weak and didn't really participate. Maybe there's no buyback, maybe there wasn't enough flows. I don't know. All I know is that it's still kind of tight, and perhaps with the move above this 735-ish, you get to the 50-day, which is right here. But also, this isn't as far off the highs as in Amazon or etc., and didn't have as many shorts. So, here at this point, I guess short term, if it could stay above 723, this is your next pivot resistance. But then the 50-day is right there. These two stocks are not for the faint of heart. They're loose and wide, and if you buy it wrong, you lose money right away. So make sure when you're trading it, there's some volume and you have some reason to be in there. Netflix has been kind of lethargic too. Netflix, not the greatest vehicle lately. I actually was long when I left for Florida when it went above 90, and thank goodness gave you a little bit of a morning up move before failing. At this point, I guess you could say as long as it stays above this spot, there is a small pivot developing here that above 95. Yeah, but then the 200-day is right there. But who knows? Maybe it pulls an Amazon. Maybe it comes and reclaims the 200-day with some force and gives you a bigger move to here. But that's a big, big maybe. So at this point, it's going to need some kind of probably news and heavy volume to take out this 95 to give you a trade. But until then, take a little care. Right? Short-term support is 88.30. I guess one spot would be real quickly is if it could, get above yesterday's high. Then you have this pivot here, and if it's trading heavy volume and showing relative strength, maybe there's a trade there. And that's again what we're looking to do is find some of these high probability trades that have pivot points that aren't just in no man's land. Go to BABA. I think some guys have been having success ever since this small gap up here. We talk about pro gaps, how it puts it back in the game. And you had a pro gap right here. little sideways. Come on, get off of here. My mouse is sticky. You know, you had a little sideways consolidation here, and you went. This seems like, you know, remember when he got rejected after earnings, right into this 72-ish or 73? This seems like where it's going. It's been battered and bruised, and you know, ever since, remember when it looked good coming into the beginning of the year, it failed right there and lost a 200-day and gapped lower. That was your out. So see how this, you know, why is my mouse doing this? I'll figure that out. See how this gap down gave you indication of, you know, price continuation to the downside. Well, this was your first gap up, saying maybe there's some strength the other way. But look at all of these moving averages rolling down. But there's a void up until about 71, 72 if it wants to float there. BIDU, if we go over some Chinese names, also, you know, decent move off the lows. It's been very broken, but you know, at this point, I don't think you could buy it anymore either. This, you know, this is probably your big resistance area, set, you know, in the 170s. But nice little gap up here. This was the pro gap from that low. Look at all these people trapped, and now coming into resistance. So not very compelling. If you don't want to buy it, you know, I would agree it's not an easy buy, but it's probably going to be a tough short too. But all those resistance points come in. If you want to go into social media, Facebook, you know, to me, I find it easier to trade, and it moves. It's like my Apple now, where, you know, it does give you movement. Remember this red dog reversal top here, and then it traded below that low, and that gave you some clues that this move from earnings was expired. Quick move down, didn't hold the earnings gap, finally put a low in. And it hasn't been easy. You know, it's been just kind of stair-stepping higher. It did give you some continuity, though. Friday it reversed, gave you a red dog reversal around this pivot. That pivot was 103, closed okay. That's why I took it long, and I sold it into the, you know, 108-ish, or not exact 107-ish maybe, before coming off. So now, I guess, see if it continues. You know, this is like some kind of ascending channel, and as long as it continues to follow it, you know, perhaps it works its way back into bigger resistance if the market needs a vehicle. But just when the music's over here, be a little bit careful. Micro support is 105.34. So as long as it stays above 105.34, you know, maybe it continues, and you could take trades. You could lower your time frame too. LinkedIn was actually taken off the Goldman Sachs rec list, and you know, it still went up yesterday. So maybe there's still buyers down here. You know, here is your next spot. That is your, you know, obviously the gap. Look at the size of that hole. So maybe it's trying to work its way back to there. You know, if you trade it intraday, there's some moves there. So it's just something, I guess. You know, Twitter, since that low after earnings, which was the washout low, has been moving somewhat well. You know, remember we talked about how I was like, I wouldn't short it down there at 14. Some people bought it, and this is when it broke this little, you know, descending. This is when it, you know, broke this. We talk about igniting bars. Look at the strength of this bar right here. Took back this whole lower range. Well, anyway, now it's trying to flag again, where perhaps with the upgrade today, if it could clear this spot, you know, the 50 days right above it. Not saying that's, you know, so much, you know, meat left on the bone, but it could see that, I guess. You know, this was, you know, when it took back the 8 and 21 day at 17, and now it's almost near 19. So there's trades there, and this is when this little descending channel got broken right here and showed you some commitment. So Twitter's been tradable. You know, look where it has come down a heck of a lot. I know a lot of money's been trapped in here, and sentiment was at the absolute worst down there. Wow, hold on. Let me give you the weekly chart on it. Maybe it's easier to see. Yeah, so here's the weekly chart. So this was Twitter, and look where it is now. So if you just have short on the brain on Twitter, you know, I think there's a chance that before this is all said and done, it sees like 22. You know, which is what's been in control. It's been below the 21-day, you know, on the weekly chart ever since that, you know, that earnings. Remember when it came out, you know, premature? And if you look here now, it's so easy to see. Look at the support that broke there. This was that other support. Anyway, you know, I would say 22 before all said and done, but that could take some time. I would say the metals are starting to get real violent. You know, the metals put in that high. The GLDs hit like 120 plus, and since then it's been pretty erratic and, you know, a little whippy, so I would be a little careful with the metals. Let me show you what I'm talking about there. If you go to the daily chart, oops, sorry, hold on, let's go to the daily chart back with the GLDs. here is here is what's it called? That what's it that buy whatever capitulation high. People talk about panic buy high. Well, anyway, look decent on those 2 days, and then give you a big gap down, filled the gap just so it wasn't considered an island top, and then gave you a little false sense of security. I guess Friday didn't come in, and then big gap down yesterday. Now it's filling the gap today. So it's not. It's just getting when things start to get extreme, it makes it a little bit harder. It was nice and quiet, working its way all the way up, and then that big gap up, squeeze the excess shorts out. And anyway, at this point, I would continue to give this some time if you're getting all chopped around. You do have some key support at 114.74. It's already in this gap today. I don't know. I wouldn't do much there. Even the TLTs, I'd give it some time too. There are compelling areas when you had your big move into this 135. It was compelling to buy on the 21-day when we talked about it. Remember I said 128-ish? Well, that was a good buy, and now it's trying to figure out if it could hold inside here. So it's giving you a pretty big range, and it just, as it's in no man's land, you don't know. So it trades back below 130.70. Here we are maybe testing the 21-day again. If it trades back above 131.82, there's the high. But at this point, it's not extreme enough for me to be interested. So just, but it is, giving you an inside range setup that over time, it'll give us some bigger market clues. So with all that said, today with the futures off a little bit, but they're well off overnight lows. They take a little care. I would write down yesterday's pivot support that starts the gap. We had a big gap up yesterday. Most things didn't fill it. So my thoughts are, does it push below that gap and fill a portion of it and probe a little bit, and then come back up just like it did Friday, which gave us, good trades. Some people made decent money short, and some on the reversal. Or, now that we're back above yesterday's pivot support, do we stay above it and just keep a lot of those shorts trapped and keep things quiet and then continue to extend? Or does it break below it, stay below it, and put a little weakness in there or give a little bit of a brush back to the bulls? So I'm going to look at all those. And while you're looking at that, you can see this high beta tech that has been stronger since that reversal on Friday. Does it reverse again today, or does it need to consolidate? And some days just the action isn't so conducive. I know the guys saying yesterday that it was like the lowest volume day of the year, and people tried shorting a lot of the day and got hurt, and then all of a sudden after hours the futures were lower, and now they're not that low. So lots of different ways to lose and make money. Just make sure if you're putting yourself in a position to trade, the probability is in your favor, that you have a reason to be in the trade, and you have proper outs, and your risk versus reward. And that's about it. Hope you have a great day. See you on the VTF, see you on Twitter, and I'll see you at the recap. Looking forward to it.